Hi everybody, welcome to another update on the stock screener. Today we're going to compare Verde Agritech with Oroco Resources. Why Oroco Resources? Well, I have been investing in this company last year because it was a very compelling story. I listened to a YouTube channel and the calculations were pretty okay. But it's also in that year that I invented the normalized NPV and its ratios. And once I did the calculations on Oroco resources, then it wasn't that positive. So that's when I sold it. Now, I want to showcase my formulas here. And I think these are very interesting formulas to use on every project, from gold miners to copper miners to fertilizer companies. You can use this on everything. So you could think I'm comparing apples with oranges here, but I think these ratios can be used on everything. So you need to have an open mind here. So let's take a look at the three formulas to assess a project viability. So the first one is the normalized NPV to market cap. The second one is the normalized NPV to CAPEX. And the third formula is the market cap to CAPEX. And you want to have these three ratios above 1. If it's above 1, then it's a very good project. Now, what does the first formula mean? So the normalized NPV, and you can watch my other video on that in the description, it actually normalizes the total NPV back to 5 years. So if you have a 100-year mine life, you need to divide it by 10. If you have a 20-year mine life, you need to divide it by 2 to 3. Okay, so you need to normalize the NPV, and typically I normalize it to 5 years. Okay. Now you have this normalized NPV, and you need to compare this to the market cap, and that will give you the evaluation of this project. So if it's above 1, that means that your market cap is undervalued, right? So the first formula tells you something about the valuation. Second formula is the normalized NPV to CAPEX. So that will tell you something about the project return. So if you have a low CAPEX and you can get a higher normalized NPV above 1, then you have a very good project. It will give you a lot of return for a low CAPEX. And the last formula is the market cap to CAPEX ratio. And this gives you an idea about the dilution risk. So let's say you have a very high CAPEX, but your market cap is tiny. That means that there is a lot of dilution risk to the shareholders. Because to bring this project in production, you will need to get money. You need to get this CAPEX in. And if it's very high, then you have a lot of dilution risk. So these are the three formulas that you need to apply on your different projects. So let's do this for Verde Agritech and Oroco Resources. So I have the numbers here. This is the current market cap. So Verde is now higher than Oroco Resources in market cap. Mine lives are about the same. So I took the feasibility study of the Caesar report and Verde Agritech from the latest feasibility study. Of course, these numbers can change later on, but let's take the old feasibility study. So mine life is about the same, 30 years. Okay. CAPEX. Here we have a huge difference. So Verde is much lower in CAPEX, and Oroco is above 1 billion in CAPEX. So this is a red flag for me already. Then we look at the NPV. Verde Agritech at spot price has an NPV of 25 billion, while Oroco only has 3.5 billion. This could go higher if they find more resources, of course. But you can already see that there's a huge difference, 25 and 3.5 billion. And then we look at the current earnings. You can see that Verde has already earnings, 100 million. Oroco is just an exploration company with no cash flow. Just wanted to put this in here because this has an effect on the dilution risk. Okay, so then we calculated a normalized NPV ratio. I normalized it to 5 years. Okay, 5 years. So that means we divide it by 6 because this is 30 years. Divided by 6 will give you 5 years. So 25 divided by 6 is 4 billion. Okay, 4 billion normalized NPV. For Oroco, you also divide it by 6. So this divided by 6 will give you 580 million. So then we are looking at the value. Normalized NPV to the current market cap is 11. So this is very undervalued because you get a very high NPV to market cap. Oroco is actually also undervalued when you use this metric because it's 3 times the current market cap. So there's an upside of about 3 times here. But of course, Verde Agritech is much higher. It has 11 times upside. So this is already okay. But then we have 2 other metrics, the normalized NPV to CAPEX ratio. And that's the 4 billion divided by the 130 million. This is hugely profitable. So that's 30. So you have a tiny CAPEX and it will give you a lot of NPV. Problem with Oroco Resources is it has massive CAPEX of 1.5 billion. Will probably be 2 billion right now because of inflation. Because these were old numbers, these are present numbers. So here we have a massive CAPEX, but the normalized NPV is actually very low. So this gives us a number below 1. And that's a red flag for me. So that's because of this high CAPEX. And then we have the market cap to CAPEX ratio, which is the last formula. And here you can see that the market cap is 360 million and the CAPEX is lower than the 360 million. So this gives us a number above 1. And that means we have not a lot of dilution risk because your market cap is higher than the CAPEX. So Verde has low dilution risk. Now we take a look at Oroco Resources. We only have a 200 million market cap and the CAPEX is much higher. So this company will never go into production on itself. So it needs to be bought out by someone. This is tiny, so they can never get in production like this. And that gives you actually not the high ground. You want to have the high ground in every investment. Verde has the high ground because they have cash flow, they have the market cap to bring the CAPEX online, and they have the value in it. They have the value, they have low CAPEX, and compared to Oroco, there are red flags here. So this was just a showcase of my 3 invented formula. And I hope you can use these 3 formula on your projects. And this is the best way to assess your project viabilities. And I'll see you in the next video. Bye.